Hey, quick question. When was the last time you walked past a laundromat and thought, wow, that's a gold mine? Yeah, never. Nobody does that. You walk past a laundromat and you think one of three things. One, I need to do my laundry. Two, that place looks sad. Or three, you don't even register it exists. It's just background noise, urban wallpaper. And that right there is exactly why smart investors are quietly making bank on them. While everyone else is fighting over real estate, drop shipping stores, and whatever crypto's doing this week, a small group of people figured out that dirty laundry never stops. Today we're breaking down why laundromats are one of the most underrated cash-flowing businesses in America, and honestly, the world. We're talking low staff, high margins, repeat customers, and a business model so simple it almost feels like cheating. Stick around. This one's going to change how you look at that sad little coin machine on the corner. Okay, let's start at zero, because I know some of you are already thinking, bro, it's just washing machines. And yes, technically, you are correct, gold star, but here's what you're missing. A laundromat is what's called a cash flow business, not a growth stock, not a startup chasing a billion-dollar valuation. It's a machine, literally and figuratively, that generates consistent, predictable income every single week. People pay, machines wash, you collect, repeat. There's no inventory to manage, no product that expires, no algorithm that shadow bans you. Dirty clothes don't care about market conditions. Dirty clothes just exist, constantly, forever, as long as humans wear fabric, which, last I checked, is still happening. The average laundromat in the US brings in anywhere from $15,000 to $300,000 per year in revenue, depending on size and location. And profit margins? Typically between 20 and 35%. Some well-run ones hit even higher. For context, the average restaurant margin is around 3 to 9%. Yeah, let that sink in. The business that smells like detergent is outperforming the business that smells like garlic bread. Life is wild. And here's the wild part. Laundromats have been hiding in plain sight since the 1930s. That's right, the Great Depression. When nobody could afford their own washing machine, some genius said, what if we just shared one? And people paid for it, because they had to, because clothes were dirty. Fast forward 90 years, the technology got better, the machines got bigger, but the core business model completely unchanged. Coin goes in, clothes come out clean, owner gets paid. There's something almost beautiful about a business that has survived the Great Depression, World War II, the internet, the 2008 crash, a global pandemic, and still has a queue on Saturday morning. That's not luck. That's recession-proof infrastructure. And before you say, well, people just bought washing machines. Yes, some did. But in 2024, roughly 35 million American households still don't have access to in-unit laundry. That's not a niche market. That's the size of Canada. Let me paint you a picture of the ideal business. You'd want customers who come back every single week, no marketing needed, no employees standing around doing nothing on your payroll, low skill requirement, nobody needs a PhD to run a washer, cash payments, so revenue is immediate, and a product that literally everyone needs. Does that sound like a fantasy? It's not. That's just a laundromat. Let's break each one down. Repeat customers. People don't do laundry once in their life and call it done. They come back every week, sometimes twice a week. You're not acquiring new customers constantly. You're serving the same loyal humans who live within a mile of your location. The churn rate is basically zero as long as you don't let your machines break down and smell like mildew, which is, by the way, a low bar. Clear it. Low labor costs. This is the big one. Most laundromats are either fully self-service or lightly staffed. We're talking maybe one attendant for a few hours a day, or in many cases, nobody. Just cameras, clean machines, and a change machine. You can literally run a laundromat with 0 full-time employees. Try doing that with a restaurant or a retail store, or honestly, most businesses. Cash business. Now, I know what you're thinking. Isn't that sketch? No, it just means payment is instant. No invoices, no net 30, no waiting for some corporation to approve your check. Quarters go in, money comes out. Simple. Universal demand. Rich neighborhoods, poor neighborhoods, urban, suburban, everybody has dirty clothes. Laundromats specifically thrive in densely populated urban markets and lower to middle-income neighborhoods because those residents are more likely to not have in-unit washers and dryers. That's not a niche market. That's your customer base. Built in, already there, not going anywhere. Okay, real talk. Let me walk you through what the financials actually look like. And yes, I know the word financials makes some of you want to click away. Resist that urge. This is the good part. Let's say you buy an existing laundromat, which is, by the way, almost always better than starting from scratch. You're not guessing about foot traffic. The numbers are already there. Average acquisition cost for a small to mid-size laundromat, $50,000 to $300,000. Now that sounds like a lot, but here's where it gets interesting. Many laundromats are bought using SBA loans, Small Business Administration loans in the US, which means you might only need 10 to 20% down. So on a $150,000 laundromat, you might be putting in $15,000 to $30,000 out of pocket. And if that laundromat is doing $8,000 a month in revenue with a 25% margin, that's $2,000 profit per month, $24,000 a year on a $20,000 investment. That's a 120% return in year one. Yeah. Now, before you run off and buy every laundromat in your city, those are example numbers. Your mileage will vary. Location matters, machine condition matters, competition matters. We'll get into due diligence in a sec. But the framework? Buy an existing business with proven cash flow, using leverage and collect returns? That's a real strategy that real people are executing right now. Let me give you a couple of real-world examples, because numbers on a screen are one thing, but actual humans doing this is another. There's a guy in Ohio, bought a beat-up laundromat in $80,000 in 2019. Previous owner hadn't touched it in a decade. Fluorescent lights, 2 broken dryers, that sad laminated sign that says, "Not responsible for lost items" in Comic Sans. He spent $30,000 upgrading the machines, added an app-based payment system, put in some decent lighting and a TV. Revenue went from $4,000 a month to $11,000 a month within 18 months. That's not a hack. That's just basic competence applied to a neglected asset. Then there's a woman in Atlanta who didn't buy a laundromat at all. She added a wash and fold pickup service through an existing laundromat, basically becoming the middleman. No machines to own, no lease to sign, just logistics. She was doing $6,000 a month profit within a year operating from someone else's location. The point is, there's more than one way to play this. You can own the real estate, you can own just the business, you can operate the equipment, you can provide the service layer on top of someone else's equipment. Each model has different risk, different capital requirements, different upside. The laundromat industry is a platform. How you participate in it is up to you. I know, you've got questions. You're skeptical. Good. Skepticism is healthy. Let's address the yeah buts. Yeah, but what about machines breaking down? Yes, machines break, that's real. Maintenance is your biggest ongoing cost. Laundromat owners typically budget 15 to 20% of revenue for repairs and maintenance. And when a big machine goes down, it can cost $500 to $2,000 to fix. That stinks. The move? Build a relationship with a laundry equipment technician before anything breaks, have a maintenance fund, and buy machines with warranties when possible. This is a solvable problem, not a deal breaker. Yeah, but isn't it a dying business? People are buying washers now. Counterargument, apartment living is increasing, especially in cities. Younger generations are renting longer. In-unit laundry is a premium that not everyone has access to. The customer base for laundromats is actually pretty stable, and in dense urban markets, even growing. Also, the laundromats that are thriving have upgraded. We're talking app-based payments, loyalty programs, attendance services, wash and fold drop-off. The ones that are dying are the ones that haven't been touched since 2003 and still have a mural of a cartoon washing machine on the wall. Update your vibe. Yeah, but isn't it passive income, or is it actually work? Honest answer, it's semi-passive. If you're owner-operated, you're spending maybe 10 to 20 hours a week in the beginning, handling issues, doing the books, managing maintenance. Once you have systems in place and maybe a part-time attendant, it can run pretty close to hands-off. It's not a sit on a beach and watch money appear situation, but it's a lot closer to that than, say, running a restaurant where you're there 80 hours a week sweating over a grill. All right, for those of you who are now genuinely curious, here's the roadmap. Step 1. Research your market. Look for laundromats for sale in your area. Websites like BizBuySell, LoopNet, or even just calling local business brokers. You want to find places that have been running for a few years, have documented revenue, and ideally an owner who's looking to retire rather than escape a sinking ship. That distinction matters a lot. Step 2. Do your due diligence. Don't just trust what the seller tells you. Ask for at least 2 years of tax returns and utility bills. High utility costs, especially water and electricity, can eat your margins alive. Walk in at different times of day and actually count customers. Talk to the regulars. They will tell you everything. Step 3. Inspect the machines. Hire a laundry equipment technician, not a general contractor, someone who specializes in commercial washers and dryers, to inspect every machine.
You want to know exactly what's going to need replacing in the next 12 months. Use that as leverage in the negotiation. Step 4. Explore financing. SBA 7A loans are the most common route. You can also look at seller financing, where the previous owner essentially loans you part of the purchase price, which is great because it means they're invested in your success. Some buyers also partner with investors who put up capital in exchange for a percentage of profits. Step 5. Optimize and upgrade. Once you own it, don't just maintain it, improve it. Add card and app-based payment systems. Offer wash and fold drop-off. Keep it clean. This sounds obvious, but you'd be shocked how many laundromats are visually depressing. A clean, well-lit, pleasant laundromat with Wi-Fi and a coffee machine? You just made it a destination. People will drive past the dirty one to get to yours.
So let's recap. Laundromats, not glamorous. Not the business you brag about at dinner parties. Nobody's making a Netflix series called Dirty Money, The Laundromat Chronicles. Actually, wait, that sounds kind of good. But here's the thing about unsexy businesses. They work. They print money quietly, reliably, week after week, while everyone else is chasing the next shiny thing. The best investments are often the ones that make people say, "Really? That?" Real estate, vending machines, storage units, car washes, and yes, laundromats. Boring, predictable, profitable. And here's the mindset shift I want to leave you with. We live in a world that glorifies the flashy, the startup, the pitch deck, the guy on Instagram who definitely made $4 million dropshipping phone cases from his laptop on a beach. Sure, buddy. But the actual wealthy people, the quietly, sustainably wealthy people, a lot of them own things that are embarrassingly boring. Parking lots, self-storage facilities, mobile home parks, coin laundries. They're not on the cover of Forbes. They're not doing TED Talks. They're just collecting checks every month, like clockwork.
The laundromat isn't a get-rich-quick scheme. It's a get-comfortable-slowly machine. And honestly, in a world of overnight success myths and crypto moonshots, that's the most radical thing you can invest in. Stability. If this video made you see that sad little coin op on your corner differently, drop a comment. Tell me what boring business you want me to cover next. If you haven't subscribed yet, why are you doing this to yourself? Hit the button. It's right there. It costs you nothing. And I'll see you in the next one. Peace.